All right, hello everyone. And I just restarted the stream. Give me 1 second. All right, let me just start. So let's go through the week 36 review, what I did this week, and how things were. So let's just get into it. I think first we're gonna start with the journals um, for Monday. So now, hold on. All right. So the first trade was not the first trade, the first day. I had not done an analysis, and I remember there was no news Monday whatsoever, and I was busy, I think, or something was going on, and I just decided not to trade. But I do remember tape reading and seeing a trade. Oh yes, I remember I was studying. So there was a midnight open here. We came back down to a discount. There was a 5 minute short term low that was forming like a 5 minute breaker, and I was going to take it quickly to the first low hanging fruit, and it worked out very well. And at the time, seeing this trade, I was like, I know I could take this in my head. Like I knew that I could take it, and it would have been like 60 points, around 70 points. And it was really clean too. But I didn't take it. I had the urge, but then I said, why did I not take this despite being certain it would work? Because I had not planned on taking anything. In the past, I would simply completely remove myself from the chart when I said I didn't want to trade. Now I'm able to gently nod and accept that it's not my turn. I think about how devastated I might have been by not following my rules today if I had lost, right? And the want to avoid pain was more powerful than the want to make money. I managed myself so well this morning, and I'm very proud of it. I will continue to manage myself out of charts the same way I do in the charts. Hello, Neko. I thought you were listening to ICT's Twitter space, unless it hasn't started yet, because time is still distorted, which is crazy. But yeah, so that was what was going on Monday, and let me go into the actual breakdown of the day. This is the calendar. Obviously, no news Monday. So now, the daily chart is still seeming to have trouble moving higher, but nonetheless, I still managed to close higher. It still managed to close higher. I will note how price stayed trading in between previous 2 days high and low, and this is something that was building up liquidity. ICT is still not there. Damn. This is Thursday's range, and so we've had Friday trade inside Thursday. So I'm noting how we are still inside that, and there's going to be liquidity at the high and low, right? There was still somewhat interesting price action with AM session making a reversal. I see how excited and volatile she was, but still managing to stay in place on the higher time frame. These moves were very exaggerated. I wouldn't have looked to do anything after the high of day ran out and after the high of day was ran out and rejected. Yet later in the 11 o'clock hour, price gets a 15-minute rejection blocking and delivers higher. See how like 9:30 kind of like expanded, made a new high of the day, and then came all the way back down and came all the way back up. So we're very excited. Like there's lots of price action here. It's moving, but it's not really going anywhere. It's still managing to stay sideways, which is a little frustrating if I'll admit, but I said there was a 5 minute short term low that was not traded through and rejected as price was hitting the higher time frame PD array. This led to a nice institutional order flow entry drill on the lower time frame. This is what I talked about in the journal at the beginning. Try moving this. No, never mind. All right, and then we go to the Tuesday journal. All right, so looking for something to run down the sell side. Ideally, I'd like to see if price will move past this level and seek much lower. Seeing a run back to some premium at the 9:30 open would help position me best to capture this. I am noting that the Dow and S&P are much lower than Nasdaq. So with this being said, if Nasdaq shows rejection of old lows with displacement, I wouldn't mind hunting along. So basically, I want to see sell side here, but if price rejects this low and starts to go higher, then I wouldn't mind be longing. And then I was also looking at JPY. I'm open for retracements and discount to continue to run higher. So I was bullish on JPY that morning. And as price was coming up, I was looking for like this high, maybe higher, just looking for maybe retracements in order to capture something there. And let's break down the day. Price is still very poorly making her way higher. I am seeing a lot of clean liquidity lower in the last couple days. Clean liquidity lower in the last couple days. So what I'm trying to say here is the trend is obviously really clean. There's lots of liquidity lower, and it's like we're kind of like pushing up against a wall on the longs. Like we're every time we go above the short-term high, we kind of like fail it a little bit. But we're still slightly making up those candles, and now we have basically a down close candle, right? So I mean, it looks like price might start to lose momentum and turn over, which could be shorts, right, into that trend with all the liquidity down here. Visually, this graph looks amazing. I was able to be on top of it and foresee the draw. London traded nicely to get down the sell side after the short-term low was taken out and price failed to displace beneath it to continue London's bearish swing, but instead price distributed to Thursday's high. So good work, love it journaling. What software is that? This is Notion. It's a cloud on the internet. You could also download the software, but it's called Notion.so. It's free, but obviously you can do a lot more with the paid. It might just be a little bit limited if you have the free, but yeah, I have the paid version. So, anyways, this is the London range, the bearish sort of move lower, and then the morning reversed, create a market maker buy model to deliver the buy side liquidity. I mean, there's lots of places here you can look at and then try and find trade ideas off of. Mainly the two that stand out to me are the entry into the inverse fair value gap here and the entry here on the hourly bearish fair value gap. So these are both like second stage sort of deliveries that are pretty quick and don't mess around too much, hanging around, right? So anyways, the S&P this time is lagging behind, was signifying that trade should be looked for on the Nasdaq. This is partly why there was attractive price action. So for a couple of days last week, I think maybe Monday, the S&P was kind of leading for longs, and Nasdaq sort of wanted to go lower, but it wasn't really going lower. It was kind of following the S&P, and then it was pretty tough to see longs on that. But now we have the S&P like falling behind the Nasdaq, like just failing to get above the new daily high. So it's showing that Nasdaq may be in position to move the market. And if I trade Nasdaq, it's better for me if that's the case. So 50-minute key areas of interest. So I have the 1 hour order block that after this ran into the fair value gap there. I would look at how that order block got formed. What price action is inside that candle that could be used to get short to anticipate the order block forming. It's as simple as a turtle soup up here, right? Turtle soup right above the order block's high. Go short. That would be like the best entry, but I've obviously I would have needed to have a lot of confidence there, and I wasn't up at that time. But then you have another afternoon delivery, which kind of retraces into a 15-minute fair value gap and also order block and breaker, and hourly inverse fair value gap, also beneath midnight open. This is the London session, so you can see the 5-minute short-term highs that kind of get ran out here, and then another one there. And in the morning, as you run into a 5-minute breakaway gap or a new week opening gap or high, right, you get another short-term high that kind of leaves a breaker and leads into a better run. So basically, if your order flow, if you know the order flow is bearish and you're looking to go lower, you see like how it'd be easy for you to position yourself short in order to capture, a lot of the range if you just wait for a short-term high to be broken on a chart like the 5 or 15 minute. Then you had the best shot to be positioning yourself in your premium to get down to discount. And these are the entries. So there's institutional overflow entry drills and inverse or value gap entries. I'm just using this to show, to visually remember, and kind of like backtest a little bit. And this is later in the morning at around 8 o'clock hour. Another inverse or value gap after that short-term high gets taken. It would have been pretty nice. Anyways, this is the morning where you've got more after we've kind of manipulated ahead of 9:30. 9:30, instead of manipulating some more and doing the Judah swing already happened, right? So 9:30 starts to deliver higher. And now it goes above the minute open, dips back down below it. Initial fake 5-minute run higher. Short-term low stops get taken out, and then price starts to move higher towards buy side, eventually hitting it up there. Inverse or value gap entry could have been looked for maybe, and does not. There wouldn't have really been any other opportunity after that. And that was Wednesday. Or yeah, so maybe Tuesday. Anyways, let's go to Wednesday. I already read Tuesday. So this is what I wanted to see Wednesday. I wanted daily chart to expand lower today. So I wanted a nice run on sell side. I would need some sort of premium to look for shorts. If we sweep the lows and start to displace higher, I would look to run back into premium. So this is kind of me switching my bias. First, I wanted to look for only shorts, but I needed a retracement. So there was that hourly order block there, that one thing I was watching. Then, and we're still, even if we get to that hourly order block, we're still way beneath midnight open. So we're very, very oversold, not very underbought. If we sweep the lows and start to displace higher, I would look for a run back into premium. And this is just because we weren't really retracing. And I said, well, okay, if we take liquidity down here, it's possible that if we displace, we can start to go long. So I had gotten this idea in my head that I might look for longs. And this was a mistake, right? Because it was not part of my plan. I changed it. You can see the time it was taking. It was at 10:01. I had already been looking at charts a little bit. And I thought maybe it's not too late to add to my plan, but no, this is a mistake. So anyways, I said, you took this trade and it lost. You were upset because you had wanted to buy in the blue gap the first time price came back to it, but you weren't certain enough to be the place to trade, to be enough to be place to trade. Whoa, weren't certain enough to place the trade. This was a valid trade back to premium, but imagine how much better things would have been or would have gone had you waited for premium to take place and then looked to short. So basically, I got stopped out by a couple points. I wanted to buy on this candle inside the blue gap, but I wasn't fast enough. I was looking at it. I'm like, really not certain here. Should I not? And then I hesitated, and it started to go without me. It came back, and I'm like, I'm happy I didn't, because I thought it was gonna lose, and then it ended up bouncing. And at that point, once it started delivering, I wasn't on the charts anymore. But this is not really pretty. The fact that it inversed that gap. Then what I said next was, this should have been the trade taken. Just imagine, Leon, you could have made $2,400 in 24 minutes. That is crazy. Everything played out the way you expected it, and your model was there. It is possible to be consistent. It is possible to be making six figures by 2026. Everything's in your hands to do this. You just have to believe you can, and you can. You really can do this. It's not hard. You are making it hard all by yourself by inviting doubt and opinions. The facts are The same things repeat every day. They repeat over and over, and you predict them over and over. You will make your bread if you just keep it up. So this is trade like that I kept looking at because it was beautiful. It's a very nice trade. It runs for lots of points, like over 100, actually almost 100, and a bit over 80 points, and almost no drawdown, right? And it was a 5-minute short-term high that I just needed to wait for instead of trying long arbitrarily down here. So it was a losing day and it was pretty disappointing, but it is what it is. And we have Wednesday. So Wednesday expanded lower into a daily order block and rejected it higher after having moved away from some buy side. Price cleaned the trend that was going on in the last few days. The morning used a bearish order block on the 1 hour to reject lower. This is a key higher time frame level that could be used to propel price lower. That's a little better. Price seeked higher to retrace into a premium. I don't even know why I'm wearing my headphones. I'm not even using them. Price seeked higher to retrace into a premium at 10:45 after a move lower at the 9:30 open. So we have 9:30 open, the sends price lower, and then 10:45 retraces. This is another thing that kind of got me a bit confused too. I maybe have assumed that 9:30 was a Judas swing when it was not, because the higher time frame does want to clean up the liquidity on the daily chart and deliver lower, right? So 5-minute short-term high as manipulation to then continue lower. So you can see the manipulation here. You have an initial figure run down, and then you have price that comes right back above it, and then it starts to deliver lower to the sell side liquidity. And the 1-minute trade that I showed you earlier. Okay, now I'm moving on Thursday. So Thursday I did profit, and then I ended up profiting for the week. It was the only other day I traded except for Wednesday. So I said I would be interested in looking for buys today after the daily chart dropped into an order block and rejected. So there's also mean threshold the order block. So price came into it and rejected it, started moving higher off of that area. I want to look for some discount for price to use to go higher unless 9:30 doesn't send us deep in discount. I want to pay attention for shorts as we are significantly above the midnight open in a premium. So I was kind of like I wanted price to give me some discount, but I wanted 9:30 to do it quickly because if we use the part of the 10 o'clock hour to start to reverse, it would start to run out of steam, and seeing another run to new daily highs seemed unlikely. Then I did take this. It was my model, and even though time did not move the day, even though I did not time the big move of the day, the expansion happened at lunch, I still managed to find my model and get out at the low hanging fruit. I did a good job managing my emotions in the trade and taking my model. I said, now you see, hold on, let me first look at this. So 5-minute short-term low, taking out inverse or value gap on the 30-second chart, deliver low hanging fruit. So now you see how there was nothing to worry about yesterday. You did it. You really are doing it. Believe in yourself. Success has always been within reach. You just need to grab it and hold on to it. Keep following the rules and carrying yourself in a professional manner, and you will attain your wildest goals. Sure, you didn't make your 1K this week, but you still made money. Even better yet, you are able to take out a payout. Going forward, you must change nothing and keep studying, working hard, and focusing on the right things in life that will propel you towards your goals. So Thursday, that's what I said. Price has not moved too much today. We have had a large range day yesterday and are now taking some time to relax. Price had left London lows overnight with a London expansion, then traded back into them in the morning. The afternoon traded the liquidity higher in the morning after filling the day opening gap during morning. So New day opening gap. I don't. It's this one right here. All right, we had initial run down. I took long there to get back the order block, and we had another run lower, which only then did we actually go up. So a little bit confusing, but on the 15-minute chart, let's see what it says. The description. I find the afternoon makes sense where she went, but the delivery was very lazy and slow. Okay, so this is where I went long. We consolidated a little bit. Short-term low here was taken out, and then we started to go higher. 15-minute order block. Maybe this is my model, but using higher time frames, like 1 hour, 15-minute, 5-minute, instead of 15-minute, 5-minute, 1 minute. I said then in the morning, after taking sell side and rejecting the day opening gap, I looked long after I saw the break of a 5-minute short-term low. The idea worked to run back to a premium, and other than that, lunch seemed to be the best time to trade. Okay, this is the trade that I took. So there was short-term low there, price taken out, inverse value gap on the 30-second chart, and I delivered it to low-hanging fruit. I find the delivery at lunch hard to trust, but still did go up quickly. So it was really tough for me to see lunch and be like, yeah, okay, this is gonna go higher. I mean, this is very overextended. There was a lot of volatility, obviously, but these are some of the reasons I didn't really find lunch too attractive that day. And then finally we have Friday. And Friday there was quite a bit to talk about. It was probably one of the better days to trade, but unfortunately the times to trade were not lining up with the times I could trade. So I didn't do anything Friday. But I said I wanted to continue looking for buys to get to a new high. Price is already overextended on the 1 hour chart. Ideally, I want to look for a discount to long, but I don't know if price can keep enough space to do so. So I was sort of maybe expecting a complete expansion higher to the buy side with 930 doing that. And that is sort of what happened. And we reversed at the end of the day. And there were shorts at the end of the day, but I didn't account for those shorts. I also commented on JPY quite a bit. And I was asked my opinion on JPY a bit later in my live stream about like why I was hesitant on this trade. And I'll talk about it more now that we actually have what happened. So JPY looks like she is gone and started to move lower. I will not be doing anything from here. So I was saying that basically JPY, it's too late for me to trade it. It's already starting to deliver its final phase. I'd have to wait for buy side or maybe chase. Anyways, here I said that I was right on both assets today for JPY. The heavily discounted shorts were not the best with multiple stop runs and though price action on the lower time frames with lots of and tough price action on the lower time frames with lots of retracements. Next, NQ had ran higher, and since I didn't plan for shorts. I took none. I accepted all this and concluded the week in profit. I'm now able to relax and enjoy my weekend. Lately, I have been valuing this. I have been valuing this with the stress of trading. The weekends is what I'm talking about. I will come back next week better than ever. So, like, I actually really like my weekends now. And I used to hate weekends, but now I love looking forward to weekends and actually getting the chance to just stop trading for a second, focus on enjoying the weekend and, other things and trading. And it's like, it's nice. I can't lie. But this is JPY, right? So I was asked why I was hesitant. I wanted to short in this area here. And I said I needed a 5-minute short term high. So it was a 15-minute key level somewhere around here, like an order block, 5-minute short term high. And a lot of people were thinking after sell side was taken, they were going to go long. And I don't think they agreed with a short bias or too much or didn't understand what I was seeing. But even though the sell side was taken, it didn't matter to me because I had not these relative equal lows, but this low in mind because price was bearish on the bigger time frame. We've retraced a little bit. We've taken out the high of the day. There's no reason to go back up. So once we take out these lows, there's no reason to go back up. We could keep going down to take out some more lows here and then start to contribute to a bigger move down Monday and going into the rest of the week. So I had a short bias on JPY, but you see there's two spots I would have been interested to trade. The short-term highs taken out here and the 15-minute fair value gap, right? So, no, this is the NASDAQ. Oh, but anyways, you see that when we're coming around 9:30, when I start to trade, price has already left. So you take a look at those areas that I said I would be interested in shorting. Here, 5-minute short-term high, 5-minute breaker, 1-minute institutional overflow entry drill. Really nice. That would have been an awesome position for me. We do it again here. 5-minute short-term high, coming back to fair value gap. We do stab all the way down into here, but whatever, it's manageable. Also, we could do an inverse fair value gap. But anyways, we eventually delivered down to the very sell side after kind of like consolidating a little bit after hitting the buy side. And then this is the NASDAQ, 9:30 open, ran up way up, and the rest kind of, uh, you know, moved back into the day's range. And I didn't plan for this. I didn't account for shorts, and I wasn't on the charts anyways by the time it was time to short. But there were nice 5-minute short-term highs and then fair value gaps. So you see, even then though, these candles don't really look good. And on JPY too, like if I had waited for a 5-minute short-term high, like another one instead of this one here, taking out this 5-minute short-term high, if I would have waited till around here, I would have had to like experience back and forth price action, lots of drawdown, lots more if I had gone in earlier. Then yeah, so price does move back into the day's range. This is normal because it's a TGI. It moved back into the weekly range, and weekly range was made up by Wednesday, Thursday, and now, yeah, those made the high and low. I'm pretty sure maybe it was Tuesday, Thursday, and simply the week retraced into that towards an equilibrium. So let's go down to analytically. Oh, and one more thing maybe you could point out is the price action on the lower time frame. If you go at JPY lower time frame, there isn't really like a really nice fair value gap institutional overflow entry drill that you could look and go take like you can on the 1-minute chart. So that could be another reason too. Just like back and forth candles, I don't really want to participate in that. But what happened Friday? The daily chart today ran out the buy side liquidity I was watching all week, and then retraced into this week. Price expanded from an hourly order block in the 7 o'clock hour, and 9:30 opening delivered price higher. This high was made in the 10 o'clock hour, and lunch rated to morning longs. Rated just morning longs. This was not a bad technical day, but once again, the delivery of price did not line up with the time I like to take. I like to find trades. The early morning at 7 o'clock ran off pretty quickly, but there was a nice reversal. Nice reversal that started running well at lunchtime. Positioning myself to capture this move would have taken some patience and skill, since price did not immediately deliver from the high. So here we immediately rebalance, left a breakaway gap, and up here we have an order block that we resist. So there's two spots really I would be interested in trading here. The 5-minute short-term high, so you see all my runs on stops that could have been runs on stops. And then you have over here, run on stop there. And price continues to move into the day's range after it takes out this buy side there. Then this is the entry in the morning. This would have been really hard to capture, but it would have probably been the best move of the day. You know, it would have been the small short-term low there on the 1-minute chart, immediate rebalance, and then inverse value gap. You would have needed to trust that, right? So it would have been tough, for sure. And this is the 1-minute chart. These were not bad. No, yeah, this is the shorts. You see that I would not want to be taking this, right? Because it's always back and forth here. It's really tough, sticky. Like I wouldn't want to take that. And I'm glad I didn't. So I was off the charts anyway. You know, I don't want to do that because it's just it would have put a lot of stress on me when it's not really moving. It's going back and forth and drawdown. So, anyways, that's basically it for the week. I'm trying to go quickly and not taking my time because I'm very tired. And you know, I just kind of summarized. I didn't go in depth in too many things, so I may apologize. There's a lot more I would like to talk about, more on how I was feeling this week and stuff, but I unfortunately just don't have enough time. because I'm just very sleepy and I'm at work next day. So I'm sure some people could tell just by the way I'm kind of like speaking and stuttering. But yeah, I will be going to sleep for like 2 hours. Thank you for joining in. If anybody had a was in there watching, we did do a good job this week, and I hope anyone watching also did a good job. And well, good luck next week.